I'm sure I'm not the only one that dreams about buying a bunch of shares in Amazon and Apple and Facebook and Microsoft and all these amazing companies. But I discovered a little later that stocks are great, but ETFs are way cooler. If you'd like to learn more about what's better for you, stocks or ETFs, stay tuned until the end of the video to catch all the tips. Hey guys, just Vaish here. If you're new to the channel, don't forget to hit that subscribe button and drop a huge thumbs up to support the growth of my channel. As always, check out the links in the description below to get started with investing, and you can earn a little bit of extra money as well. But until then, I'll see you at the end of the video. So when it comes to picking whether ETFs work best for you or if stocks work best for you, you really want to decide on how much money you're looking to invest, what kind of an exposure you're looking to gain in the market, and what your goals are. Are you the type of person that just wants to collect dividends without doing much work? Or are you the type of person that just wants a say in what actually happens in the company and get voting rights and still collect those dividends? So first of all, to start off with what an ETF is. So an ETF is an exchange traded fund. And essentially what that means is companies will take fractional ownership in different institutions, bundle them all together as a basket of goods, and sell that back to the market as an ETF. So for instance, rather than buying an individual share of Apple, another of Amazon, and another of Microsoft, you would essentially buy an ETF that combines a fractional share of each one of those companies at a fraction of the cost. So with ETFs, they can be bought and sold like regular stocks on the market between trading hours, and they can often track an entire market, or they can go and track like a bond market depending on different types of institutions that they're involved in. And then they also have minimal management fees. Because ETFs are often just controlled by computer algorithms, they have far fewer fees, if any, associated to them, and most are very cheap. And beyond that, ETFs cover a broad range, they pay regular dividends, and they themselves also experience growth because of the securities that are held within them. Looking at a few examples, so the first one, my favorite, ZDV.to, and that's BMO's Canadian high dividend paying companies that are built into one ETF. So with ZDV, it has fractional ownership in a bunch of companies that pay high dividends. They'll take that fractional ownership, make it into a dividend on a monthly basis as well, and pay it back to holders of ZDV. Now with this particular ETF, you're experiencing growth on the actual ETF, you're getting consistent and growing dividends, and you have equal and broad exposure to different companies within that market. And the second example is VSP.to. So that's Vanguard's version of the S&P 500 ETF. So this one tracks the broader S&P 500 index, and it gives you, once again, exposure into companies such as Amazon, Apple, and also even Microsoft. So you're getting exposure into those major tech companies at only about $70 Canadian. And not even that, some of those tech companies may not pay a dividend to their actual shareholders, whereas as a holder of VSP, you're getting a regular dividend as well. As those individual companies go up in value, so does your actual ETF. Because you have fractional ownership, when something tanks, your other investments within that ETF are going to help balance things out. On the other hand, looking at what a stock is it's essentially a security that represents a fractional ownership, once again, of an entire company. So this gives the actual stock owner a proportion of the assets and profits equal to the amount of stock that they hold in that company. So for instance, if you buy one share of Apple, you're entitled to whatever that one share represents out of the total outstanding number of shares of Apple stock. So you can't necessarily claim that you're a partial owner or anything, but you are entitled to one out of the total outstanding shares as a percentage of their profits and any sort of dividends and whatever the case may be. And with stock in particular, corporations issue stock as a way to raise funds for their actual day-to-day operations. So you'll hear about an initial public offering or an IPO. And when these happen, this is a way for the company to signal to the broader market or to the larger sort of area that, hey, we're looking to raise some money. And as a result of this, we're willing to offer you, the public, a percentage of our company's total outstanding shares. When it comes to stocks, there are two major types that they sort of fall under. The first is common stock. So, as a common stock holder, you're entitled to a vote during the shareholder meetings as often as they occur. And you're also entitled to any dividends that are paid out to the sort of common stockholders. On the other hand, the second type is preferred stock. So, a little different from common stock. As a preferred stockholder, you do not typically get voting rights. However, you're still entitled to those dividends and anything else. But what's a little different is in the event where the company is unable to pay out their dividends or their profits, or they're about to file for bankruptcy and they liquidate as much as they can and have a bit of earnings or a bit of money left, preferred stockholders get first dibs on anything that they can claim so that they can sort of reduce their losses. Whereas common stockholders have to wait until everyone's taken care of, from the preferred stockholders, any creditors, and everyone else, and then maybe they get some of the crumbs that are left. So, as a major sort of way of looking at the two, common stockholders are your typical you and me kind of guys that get voting rights and get dividends, whereas preferred stockholders get a little bit more and they typically end up on the company's balance sheet. When it all comes down and you choose whether you want to invest in ETFs or stocks, it really depends on your personal liking. But if you wanted to choose one or the other, always keep in mind what your portfolio needs to do for you in the longer term or what your goals are. If you learned something new about stocks or learned something cool about ETFs, let me know in the comments below, and anything else that you would like me to cover in the future. But if you already haven't subscribed, hit that subscribe button and support the growth of the channel. Drop a huge thumbs up, and I guess I'll see you next time.